Welcome to Common Sense Investing. My name is Cameron, and today I continue my journey in trying to find the next 10x penny stock. Today I get to introduce and discuss some of the rewards and the risks of investing in Omni-Lite Industries and a fighter jet on the cover page. What does Omni-Lite do? Well, no surprise, they are a provider of aerospace and defense components and technology. They are brand recognized among a lot of tier 1 companies. I will talk about the numbers and I will talk about their potential. What they do is complicated. Things like conventional casting, robotic processing, metal forming, single die forming. They're trying to decrease costs by reducing size, reducing weight, increasing power, increasing the life of products, which gives better connectivity and performance. Some of their complicated work includes metal forming, where they transform high-strength wire stock into complex-shaped fastener components. Investment casing, where they transform high-strength molten metal into complex-shaped jet engine components. And microelectronics, where they design and manufacture RF and microwave sensor electronic subcomponents. Complicated and kind of simple at the same time, mostly kind of boring, and I love boring in a microcap stock. In the aerospace and defense market, what they do is they service customers. This is who they are selling to, but if you look at the end customers for their products that they're manufacturing, massive companies like Boeing and Airbus, they're in the industrial market as well as the automotive market, again servicing huge customers like Chrysler and Ford. Don't forget that I'm not a financial advisor. I'm definitely not your financial advisor. This video is not financial advice. This is simply how I invest, not how to invest. I can make mistakes. Please go do your own independent research. Generally, I'm looking for companies that are improving. Revenue trending up, earnings trending up, cash trending up, ROIC trending up, valuation trending up. Is that Omnilite? A little bit lumpy, but with some strong recent growth of 52% compounded annual growth rate in revenue. Their backlog has been massively increasing. Recently, they've been chipping away at it. This could mean good financials in the future. Mostly though, look at this adjusted EBITDA. It went from being a negative adjusted EBITDA for a long time, significantly trending up. We can see significant change and improvement in this company, as back in 2022, you could see the expenses were much higher than the revenue here in green. So this was a money-losing company. All of a sudden, you see that change, an inflection point where revenue is higher than expenses and they are profitable. Free cash flow, cash is king, is also trending in a fantastic direction recently with positive adjusted free cash flow, which is improving shareholder equity and net cash, and they are still investing in themselves, which is always important for the future. Just about $14 million of revenue, a market cap of about $19 million as I record this. They are making cash, operating cash flow, $738,000, levered free cash flow, $577,000. They're getting growth, which is absolutely fantastic to see. This is all on a 13 million share float with about 11% insider ownership. A changing company. I mean, where they were maybe wasn't great. Remember, aerospace and defense during COVID, wasn't a lot of spending in that market at that time. Company was really struggling. Of course, current for this slide deck, they were talking about cost saving solutions to try to become profitable because, of course, the good times of COVID and free money can't last forever. What's ahead for this company is possibly M&A, but using their strong track record of increasing revenue, EBITDA, and free cash flow, they want to improve their business model, capable of delivering above market revenue growth and significant incremental EBITDA margins. I'm a growth investor. We're in microcap stocks. Where is the growth going to come from? The commercial air backlog is in excess of 13,000 new aircraft, and it's estimated that over 40,000 total aircraft will be serviced by 2032. The defense market is cycling up. As we all know, there's a lot of high-risk conflicts out there and a lot of spending on defense improvement, including, according to Omnilite, defense electronics, which are aging and need modernization, with more growth potentially coming from large manufacturers choosing to outsource specialized manufacturing to try to cut costs instead of trying to do it themselves. The industry looking for streamlined component solutions. So out of the box thinking, small innovative microcap companies can be very, very good for the industry, and the industry needs for an onshore reliable producer of specialty components to mitigate supply chain bottlenecks. So reduce the risk of any delay in shipping, have it done by a company you trust that's nearby, and have that company be able to produce out-of-the-box innovative solutions. Sounds like Omnilite is your company. And if that's something you're bullish on, then you could be bullish on Omnilite's growth in the future. Omnilite owns about 7.2 million shares of California Nanotechnologies, another company that I've covered, and I will post their video down below in the pinned comment. I'm typically bullish on a company that values its shareholders, and here they say they want to focus on profitable growth and shareholder returns, positioning the business to achieve double-digit returns. And if that doesn't sound good enough, well, then we could just sit here and look at the coolest investor deck that I've covered in a while. And if you want to continue researching Omnilite, please don't forget I have a paid Patreon. The link to that is down below in the pinned comment. My name is Cameron. You have been watching Common Sense Investing. Thank you for your time.